Hello, everyone, and welcome to Lavras Gold's live digital roadshow today, hosted by Six. We are joined with the company's president and CEO, Mike Durose. He's here today to review the story and offer a presentation followed up by a Q&A session. So you can feel free to submit your questions in the Q&A panel found on the right-hand side of your screen. Without further ado, I'll kick things off to you, Mark.
Thank you, Kyle, and thanks everybody for taking the time to listen to our corporate presentation, Lavras Gold, and the title of our presentation is Exploring to Realize the Potential of a Multi-Million Ounce Gold District in Southern Brazil. I will be making some forward-looking statements, so please read the fine print. Lavras is a relatively new company. We've been public for about 14 months, the consequence of a spin-out from our predecessor company called Amarillo Gold. Amarillo was taken over by Hoschild Mining in April of 2022, primarily to build a shovel-ready gold project, million-ounce gold project in central Brazil called Mara Rosa. In terms of our corporate goals, our goal really and our focus is in southern Brazil on our LDS project, where we're trying to demonstrate that we potentially have a world-class asset in terms of a gold target on our property. Our team is led by a combination of exploration, mining, and capital markets experience. We have a very tight capital structure, which I'll talk to during the presentation. We have identified at least 23 known gold targets on our property in LDS in southern Brazil. We're in an area of excellent infrastructure, so we're not in the northern parts of the jungles of northern Brazil. And so far in the last 14 months that we've been public, we've identified 4 or 5 new discoveries based on our drilling program. In terms of my background, I'm a geologist with a mineral economics background in environmental engineering. After working in the field as an exploration geologist, I ended up becoming a sell-side mining analyst focusing on the precious metal sector with a number of very large reputable investment banks. From there, I've basically been doing consulting on the geology side and also some corporate advisory work, and have now taken on this position as of 14 months ago. Our chairman is Rolly Uloth. He's a businessman based in Toronto, formerly president and CEO of West Dome Gold. He also founded a very large trucking company. Has a bit of an entrepreneurial spirit, which is fantastic. Our country manager is Paulo Serpa. He's a Brazilian. He is a mining engineer with an MBA. He's really the face of our company in Brazil. He has great relationships with the various government agencies, which is important from a permitting perspective. In terms of our communication strategy, we have Anne-Marie Brissenden, who is on the presentation with us today. And we have a board that's a combination of technical and financial skills. In terms of our capital structure, we have 41.1 million shares outstanding, currently trading at about 30 cents a share. So our market cap is something like 12 million Canadian. We have 2.3 million options outstanding, and we have no warrants. Our cash position at the end of March 30th, 2023 was 2.9 million. Our shareholder base is strong. We have a combination of institutional and retail holders, but 24% of the company is insiders in management, and one of our anchor investors is Eric Sprott. We also have a 2% revenue-based or net smelter return royalty on all of the exploration ground around this Mara Rosa project that Hoschild is building to production, which I'll talk to. From a valuation perspective, one metric that people can look at for exploration companies is called enterprise value per ounce of gold in the ground. As I mentioned earlier, we have about 1 million ounces of 43101 compliant gold resources and 2 of 23 known gold targets on our property so far. When you go through the math, we're basically trading at about $4 an ounce in the ground. That compares with an industry average for the Explorcos of about $25 to $30 an ounce. So we think we're very undervalued relative to our asset base. And if you make an investment in our company today, you're essentially getting that exploration optionality for free. Because we're in the exploration business, I think it's very important that we benchmark or measure our exploration efficiency relative to our peer group. Basically, discovery cost per ounce, we're finding gold for about $11 an ounce in the ground US. That compares with an industry average of about $30 an ounce. And in Latin America, it's about $132 an ounce. So the reason that we're finding gold for such a low cost is primarily because we're in an area of excellent infrastructure, so our logistics costs are very low. And also, we have a very unique mineral system, which is very, very large. And so when we're drilling off these targets, we're actually being very successful in finding the gold. In terms of the royalty that I talked about, when we got it spun out from Amarillo Gold, one of the things we did was we created a 2% revenue-based or net smelter return royalty on all of the exploration grounds surrounding what's called the Posse Pit. The Posse Pit is the million-ounce open pit mine that Hoschild is investing $200 million to build to production. That mine will be in production in about June or July of 2024, the first half of 2024, so about 12 months from now or so. And just to be clear, our royalty does not cover the production coming out of that initial Posse Pit area. That's covered by Franco-Nevada and Royal Gold. However, our royalty covers all of the exploration ground to the north and the south of the Posse Pit, plus regionally to the tune of 65,000 hectares. Now, why is that important? It's important because when we were with Amarillo Gold, we actually made a significant gold discovery called Pistino, which is located about 3 kilometers to the northeast of this Posse Pit. Pistino is a gold-bearing structure that measures about 1.7 kilometers in strike length, was drilled down to at least 200 meters vertical depth, dips to the northwest about 60 degrees, and telescopes at surface. So in my opinion, this will become a source of mill feed for that Posse mill once it's up and running. And in this sense, we think that our royalty has significant value. We think that there's something like 300,000 ounces at a minimum at Pistino, and therefore there's some true value that accrues to that royalty. Now for the fun stuff, we're now going to move down to the southern part of Brazil in Rio Grande do Sul state. So just to orient people, Rio de Janeiro is here. If you fly south of Rio de Janeiro to a port city called Porto Alegre, that's a major city of about 1.5 million people. You drive down a paved road for 4.5 hours to the south west to our project called Lavras do Sul, to the town of Lavras do Sul. This is what it looks like in this picture. It's basically rolling cattle fields and grazing land and agricultural fields with great roads and hydro and water and all the good infrastructure that you want to see when you're trying to build a mine. Most of our field crew and geologists are from this local town and from the surrounding area. So we have a very good relationship with the local community because we are a major employer. Talking about geology, just very, very simplistically, what we're dealing is what we call a intrusive hosted gold system. So essentially what we're looking at are the remnants of an old magma chamber that's now been eroded so that it's now sitting on surface. We're also looking at some overlying volcanic rocks that have still been preserved. The rocks at Lavras do Sul are about 600 million years old. And so why is that important? It's because these intrusive hosted gold systems can be very, very large. So I've just shown you a few examples here on this slide, including things like Porgera, which is in Papua New Guinea, which is owned by Barrick Gold and Zijin Mining. That's about 35 million ounces of historical plus existing gold resources. Olympic Dam in Australia is an IOCG system. It's owned by BHP Minerals. It's basically a uranium copper mine with gold as a byproduct, but there's over 100 million ounces of gold in that particular deposit. And Cripple Creek in Colorado, which is owned by Newmont Mining, is just under 30 million ounces of gold, and it's also a very significant gold deposit. And so when you look at the physical sizes of these deposits, they range in size from 3 kilometers to 4 kilometers in diameter to about 5 kilometers to 6 kilometers in diameter. And this is important because when you compare it to our LDS gold project in southern Brazil, we actually have gold and copper showings over an area of something like 10 to 11 kilometers. So what we can say about Lavras, our LDS project, is it's a very large mineral system. And the focus for us is to obviously look for those economic concentrations where we can get higher grade gold and potentially copper, which would be economic to extract. If we look at the geology, you can imagine that if you're sitting in a helicopter looking straight down, you can see this sort of circular feature in the left-hand side of the slide. This is what we call the Lavras do Sul intrusive complex. Essentially what this is the remnants of that old magma chamber that I was talking about earlier. The green rocks off to the right-hand side are what remains of those volcanic rocks which would have been sitting on top of that magma chamber. What we found at Lavras are a number of gold showings scattered throughout this intrusive complex, or that old magma chamber, and into the overlying volcanic rocks. And these discoveries were actually made in the late 1700s when there was a gold rush with the Portuguese showing up and basically probably digging out visible gold showings scattered throughout this area. So we've identified at least 23 of these and drilled off a number of them to sort of give us a sense as to what's going on the property. On the right-hand side, I'm just kind of focusing and highlighting some of the key areas where we're focused right now. As I mentioned, we have 1 million ounces in 2 of these 23 known gold showings so far. 500,000 ounces at what we call Buchia, which is in the southwest portion of the property. We have another 500,000 ounces at Cerrito, which is in the northeastern part of the property. And then we've announced new gold discoveries in the last 14 months at Zeka Souza, Galvo, Matildji, Matildji Extension, and Villa Marietta. We also have another gold-bearing structure at what we call Canalera, which was drilled in 2007, 2008, where we have gold-bearing mineralization over at least 1 kilometer of strike length. This map really just annotates what I just described, but it also shows our 29 contiguous claims that we've put together, totaling about 22,000 hectares of ground. We currently, historically, there's been something like 65,000 meters of drilling done on our property. And we currently are in the middle of a 16,000 meter drill program with 2 drill rigs on site. We should complete this program, this first round of 16,000 meters of drilling, probably by about the end of July of this year. And as I mentioned, we've made a number of significant new gold discoveries in the last 14 months. Plus, we have, again, 500,000 ounces at Buchia and 500,000 ounces at Cerrito, which I'll talk to right now. Basically, this is our resource statement for Buchia, basically about 0.9 grams per ton gold with a blob of mineralization, if you like, sitting right at surface. What's interesting about this deposit is it's still open along strike and still open along depth. And we are actually have a drill on site near Buchia testing some of our ideas for extensions, and stay tuned. Basically, what the rocks look like, they look like altered granites. So on the right-hand side, you can see the photograph where it shows some of the drill core that we're getting at Buchia. And what's interesting is it really just looks like your kitchen countertop, your granite countertop, but they've been altered by these gold-bearing fluids that have basically gone through these rocks and then deposited the gold. This is our second deposit, our second 500,000 ounces, called Cerrito, grading about 0.7 grams per ton. Looks very, very different. It's basically looking like sheeted quartz veins with muscovite, this musky-colored looking mineral. And then we have what's called disseminated pyrite, which is actually carrying the gold. But what's interesting about Cerrito is that it, again, starts right at surface. It's, again, what we call a bulk mineable type of target or deposit. And it's still open along strike and at depth. And I actually think we can improve upon these gold grades, and I'll explain why with this next slide. The yellow sort of outline here shows the outline of that Cerrito gold deposit. Again, that's about 500,000 ounces of gold sitting right at surface. These color anomalies here to the south and southeast are golden soil targets. And as is this thing just to the southwest of the Cerrito deposit. In what we call the Villa Marietta claim. We put in 2 holes to test this golden soil anomaly at Villa Marietta, and we found higher grade gold mineralization starting right at surface. In fact, we found 28 meters of about 1.3 grams per ton gold beginning right at surface in this southwest corner of this, what I believe is still the Cerrito deposit. So that 1.3 grams per ton is significant because that grade is 85% higher than the average for Cerrito. So in this sense, I think we can improve on the overall grade of Cerrito. And you can imagine if this was to go into production, if you're going to actually start mining this deposit, that's what you want to see is basically higher grade mineralization sitting at surface with no waste removal required, because this really enhances the overall economics of any kind of an open pit mining project. These targets to the south, these golden soil anomalies to the south and southeast have never been tested, so we'll get to those and hopefully expand the footprint on Cerrito over time. This is what the rocks look like. Again, they're altered granites with a lot of quartz flooding and muscovite, and the gold is actually associated with what we call disseminated pyrite. I've annotated the 28 meters, and I just highlight that there's actually a couple of higher grade intervals within that overall 1.3 gram per ton average grade. In fact, we got 4 meters of 2.4 grams from 7 meters, and then we got another 5 meters of 2.5 grams from 16 meters. So you can see what I should say is what we're starting to see at Lavras is we get these sort of higher grade sort of concentrations of gold surrounded by a lower grade halo of gold mineralization. So for example, just below this higher grade interval, we got 53 meters of 0.68 grams per ton gold, basically the same grade as Cerrito. But again, some higher grade intervals in between, about a gram over 7 to 8 meters or so. And so what I try to explain to people is it's the higher grade zones of mineralization, these sweet spots, if you like, that will carry the economics of these projects. It's the lower grade halo of mineralization that ultimately gives these intrusive hosted gold systems their very large size. That's why they're attractive to the very large mining companies in the world. Getting on to some of our discoveries. The first discovery that we announced last year was called Zeka Souza. Essentially what we were drilling are these what we call intersecting gold structures. That's shown in the magnetic data in the blue here in the colors on the slide. And we drilled 14 holes, just under 3,000 meters. We basically got gold mineralization in all holes beginning at surface. And that's a pretty good start for a target that's never been drilled before. If we zoom out a little bit and we can see the magnetic data, I should mention that the magnetic data, what we can do in mineral exploration work is we can fly what we call aeromagnetic surveys. And basically what we can do is we can measure the different magnetic signatures in the rock, and it can actually give us a lot of good information on the structural setting of the geology that you're looking at. So these blue sort of lines that we're seeing here are what we call faults or zones of linear zones of weakness, which can be conduits or channelways for gold mineralizing fluids. You can see the 14 holes that we drilled at Zeka Souza on the left-hand side associated with this, what I called an intersecting structure. But in 2007 and 2008, we also drilled about a kilometer-long magnetic low structure, and we found gold mineralization in what we call our Canalera target. That's about 600 meters to the south east of where we just drilled at Zeka Souza. My opinion is that there's a good chance that Canalera and Zeka Souza are actually the same mineral system, so we need to infill drill to see if that is the case. The other thing is you can see there's some other parallel kind of what we call magnetic low structures to the north. So we've run a series of golden soil sampling programs over this area, and we're getting some very positive responses from the gold soil anomalies. So stay tuned. What does this look like? At Zeka Souza, basically they're altered what we call perthitic granites. They're fractured, and these fracture systems have acted as channelways where these gold-bearing fluids have gone through these channelways and then in this case deposited visible gold. So the best hole we got at Zeka Souza was 15 meters of 5.8 grams per ton gold. That's about 100 meters below your feet. So 100 meters vertical. Within that 15 meters, there was a 3-meter interval of 28.2 grams per ton gold, again associated with visible gold. So just in terms of what's the value of 28.2 grams per ton gold, well, that's about just under 1 ounce per ton gold. So that's worth about almost $2,000 an ounce per ton, which is quite amazing. We also get, again, these very long intervals, 36 meters of 0.5, for example, in hole number 10. And again, as I mentioned, it's the high grade that's going to carry the economics. It's this low grade that's going to give you the volume in these intrusive hosted gold systems. So just to step out a little bit, there's Zeka Souza, the 14 holes that we drilled. This is Buchia, about 1.2 kilometers to the south, where we already have 500,000 ounces of gold sitting right at surface. We announced about 3 or 4 weeks ago another discovery just to the south of Zeka Souza called Galvo. We drilled 2 holes, about 1,100 meters of drilling in a north-south direction, and we basically identified gold mineralization over strike length intermittently of about 450 meters. The best hole, the best intercept that we got at Galvo was a 10-meter wide interval of 4.6 grams per ton gold, and within there was an interval of about 22 grams per ton gold, again associated with visible gold. What's significant about that is that the vertical depth of that intercept was about 461 meters. And why is that important? It's because these types of intrusive hosted gold systems can actually have very, very deep roots, as well as being laterally extensive. And so this is sort of proof of concept. We can drill with our current drills on site to a maximum drill hole depth of 600 meters, which is about 500 meters vertical. It's essentially what we did. So what we can say at Galvo is we were hitting nice zones of mineralization with some economic grades over mineable widths at depth, and that this is still wide open at depth. So very important intercept there and proof of concept. And this is what some of the whole gold looks like on the left-hand side. We got visible gold, not just in hole number 2, but also in hole number 1, where we got 1 meter of 16 grams per ton gold. And again, you can see the visible gold popping out with these silicified areas. And again, we're getting these long intervals of like 0.6, 0.7 meters with higher intervals in between. So very consistent with what we're seeing at Zeka Souza and other targets on our property. Now we're moving to the southern part of our property on what we call our Matildji and Metallurgy extension discoveries. And these are very important discoveries because the geology is looking a little bit different, but equally significant. In fact, what we were looking at and how we zoned in on Matildji was that we had a very large golden soil anomaly that we identified through our surface work that measures something like 3.5 kilometers east-west and about 2 kilometers to the north and south. And so we were obviously looking for the sources of gold for both Matildji and Metallurgy extension. Well, what I should say is we found the source of gold at Matildji and Metallurgy extension, at least for part of it. And again, what we were testing are these intersecting structures. So you can see there's a nice east-west structure here, there's a northwest structure here, and then a northeast structure this way. And where they come together is where we tend to find the gold mineralization. So Matildji, so far what we've defined is a zone of gold mineralization over an area of about 300 meters of strike length. We've drilled this thing down to about 500 meters vertical, and it's still open. Metallurgy extension, we're actually finding a bit of a different style of mineralization. There's a lot more copper and silver for some reason at this Metallurgy extension discovery. And it's very important because it's a new style of mineralization and something that opens up a lot of different targets within the overall LDS project. And I'll talk to that in a couple of slides. This slide, again, just shows you what, if we're looking east along the Matildji discovery, what this looks like. As I mentioned, we've got this thing drilled down to about 500 meters vertical so far. But what we're finding are higher grade intervals of mineralization within a lower grade sort of halo of mineralization. So for example, hole number 2, we hit 145 meters of 0.7 grams per ton gold. And within that, basically, there was a 27-meter interval of just over a gram per ton gold. So again, higher grade intervals within this low grade envelope. And why that's important is because when you come to mine this in the future, you can bulk mine this. It's not like you're just dealing with narrow veins where you have high waste to ore ratios to get to the ore. This is actually a very disseminated style of mineralization. So it'll have a very low waste to ore stripping ratio, which helps on your cost structure ultimately. This is what the rocks look like. We have altered granites, again, muscovite, quartz, and disseminated pyrite. In this case, we have found visible gold popping out in certain areas. In this case, right beside what we call a lamprofere dike. For the geologists that are listening, lamproferes are upper mantle material, quite often associated with big gold systems, so very important observation. And then you can see visible gold popping out associated with this quartz carbonate veinlet. In this case, we got 31 grams gold over 0.6 meters. And then on the right-hand side, this is one of my favorite pieces of drill core because it tells the story of, at least part of the story of what's going on at Lavras. I can see, as a geologist, 4 different mineralizing or gold events here. Basically, we have what we call potassic alteration. That's this pink-looking mineral here on the right-hand side. We have this musky-colored mineral called muscovite overprinting this pink stuff. That's a lower temperature form of alteration. That's event number 2. We have this gray silicified zone here, which is the silica stuff, which we know has in certain areas carrying visible gold. And then we have what we call milky quartz. You can see this this milky quartz rimming this original fragment here. Why? And we actually have disseminated. It's either chalcopyrite or visible gold. I couldn't quite tell when I looked at it, but whatever. It's high grade and it's carrying about 13 grams gold over about 0.7 meters. So there's at least 4 events here. Why is that important? It's because it's telling us that on the Lavras Gold property, we've had a very long-lived multiple pulse sort of environment of gold mineralization. It's not just one event, it's multiple events. And so that's very important for these big gold systems, and that's what you want to see. Lastly, I'll just talk a little bit about some of the copper mineralization that we're starting to see with very high-grade gold and silver. And that was really identified in our Matildji extension drilling. This yellow kind of arcuate looking shape here is what we call a gold and copper soil anomaly. You can see it's probably in the range of 2 kilometers from north to south, and probably in the range of, I don't know, 750 to maybe a kilometer sort of east-west at least. And so it's a big target, and it's that, you know, the soils are real. The copper anomalism is trying to tell us something, that there's a lot of copper mineralization in this area. But the point is, when we drilled at Matildji extension, we actually intercepted our best hole there, which was 10 meters of 13 grams per ton gold, 23 silver, and 0.22% copper. And again, it was a blind discovery. We were drilling from surface, identifying these intersecting structures. And this is really what the rocks look like. So I have a series of photographs here. On the left-hand side, you're about 300 meters deep. On the right-hand side, you can imagine that you're sort of standing at surface, and the first photo is actually about just under 100 meters deep. But as you go through this series of photographs, you can notice changes in the rocks. Basically, you're dealing with these little micro fractures in what we call fresh granodiorite on the right-hand side. As you move to the left, you can see the rocks get a little bit more pinked up. So there's a bit more altered. You're seeing these quartz sulfide veinlets with carrying very high grade gold, 5 grams gold and anomalous silver and copper in this instance. And even in these microfractures, you know, at 92 meters depth, you're getting very high, 7.5 grams per ton gold in these microfractures with sulfides in them. So you know there's some, whatever's going on here, there's a lot of gold filling in these fractures. As you go a little bit deeper to about 268 meters vertical depth, you can see that the rocks are even more altered. They're more pinked up, if you like. You can see there's sulfide veinlets here. And in this case, it's what we call a chalcopyrite or copper-rich veinlet with no silica, but rimmed by this dark mineral called chlorite. As you go a little bit deeper, you get into what we call hydrothermal breccias with chalcopyrite in it. Again, all of these intercepts are carrying high-grade gold, copper, and silver. And then finally, at 300 meters vertical, we get into a different style of copper mineralization and very significantly altered rocks, this kind of brick-colored alteration. With purple mineral called boronite, and then we have chalcopyrite and pyrite. And this is where we got the 13 grams gold, 23 silver, and 0.22% copper. So very significant, just going through a pile of rocks about 300 meters vertical. But this style of mineralization is something that we've identified on the property and is very significant in our opinion. So that's it. Just to sum it up, we have basically 1 million ounces so far on 2 of these 23 known gold showings on our property. We've announced something like 4 or 5 new discoveries in the last 14 months or so. We have a number of targets that we need to continue to test to understand that geological baseline, but we're well on our way to proving that this property hosts a multi-million ounce gold type resource. And certainly the royalty, I would argue, is probably worth the market cap of our company today. And therefore, you know, if you make an investment today, you're essentially getting all of that exploration optionality for free. So Kyle, with that, I can just open it up to questions and yeah, see what I can do.
Perfect, thank you. And we had some pre-submitted questions there, but Mike, if you could actually do me a favor and go back to slide 26, I believe it was, with your favorite drill core. It showed 4 different events, 4 different geological events. Question is, does that from a metallurgist perspective make it more complicated to extract the gold?
That's a good question. We've started to do some metallurgical work on the 2 more advanced projects that we've done, one at Buchia and then the other at Cerrito, and just simple what we call bottle roll tests. And basically what we're finding is we're getting anywhere from 80 to 90% recoveries. And so far so good. Basically on that work, something like 30 to 40% of the gold comes out as free gold. As you know, like we have a lot of visible gold that we're seeing, you know, in for example, with the central picture here, well, it's a piece of visible gold, but there's probably a lot of submicron gold as well that we're not seeing. That's probably when you crush and grind, it will come out. Anyway, in that MET test work that we've done so far, we're getting between 30 and 40% recoveries. From there, it's simply crushing, grinding, and then you go through either flotation if you've got sulfides, like we're starting to see, for example, at Matildji extension with the copper mineralization, or it would be kind of traditional CIL type extraction with the remaining sort of styles of mineralization. So I mean, what you're probably going to see at Lavras, and this is more conceptual in the long run, is you're going to have some kind of a centralized milling facility at Lavras, and you're going to be feeding that mill with various sources of ore with different types of styles of mineralization, as I've sort of started to demonstrate here in this presentation. But it's not uncommon for these very large systems to have multiple types of processing avenues and pathways. So a good example would be something like Cadia Hill in Australia, which is the second largest gold copper mine in Australia. It's actually owned and operated by Newcrest Mining, soon to be Newmont Mining. But the geology there and the various styles of mineralization that you see there are very similar to what we're seeing here at Lavras. And so there's a lot of flexibility in that processing plant. And ultimately, I think that's the sort of situation that you'll see with Lavras.
Thank you for that. So what's the end game with Lavras? Are you guys mine builders, or how do you see this playing out?
Yeah, I mean, look, I mean, our end game is to create value for all shareholders. So that means, getting our share price to reflect the underlying value of our assets. And so, that's why we're very focused on trying to keep a very tight capital structure. And we're very focused on, building value through the drill bit. That's what we do. So we're going to be continuing to de-risk on the geology side. We're going to start to de-risk on the permitting side. And at the right time, once we understand the geological baseline, then we can start to do the preliminary engineering work and all that kind of stuff. And, I being a former mining analyst, I understand how this works. And certainly if the value proposition is that a bigger company comes in and offers us our shareholders, the right price for the asset in terms of where it is on the de-risking curve, then we'll certainly consider that. If we needed to go to the build route, I mean, that's a very different scenario. If our equity valuation was reflective of the fact that we could do a financing, actually finance to build, then we could do it. But if our equity valuation wasn't at the level where it made sense to do that, we wouldn't do it. So we're focused on creating shareholder value on a per share basis. And so whatever makes sense, we're not married to this thing, so we will do what's right for all our shareholders. That's the answer.
Thanks, Mike. And you touched on de-risking the permitting. What permitting is required still, if any, and what is the permitting landscape like in Brazil?
Yeah, so just start with the last question first. The permitting landscape is very well defined. There's very sort of a series of steps that you go through to basically get to construction and then operating. But so that's very clear. And for example, that Mara Rosa project that Amarillo had and is now in the hands of Hoschild, what happened there was kind of what we're doing here, like, de-risk on the geology side, go through the engineering part, start your environmental baseline studies, convert your exploration concessions to mining concessions, start with what they call the first preliminary license, the LP, which is really based on a very thorough kind of preliminary engineering study and also a very detailed environmental baseline study. Then from there, you apply for your what's called an installation license, just more detailed engineering work. And then from there, you get a construction license and then ultimately an operating license. And so that's the pathway. And where are we at? We have, as I mentioned, 29 different concessions, and they're in various stages. A lot of them are what we call exploration concessions. Some of them, and the way it works in Brazil is you get your exploration concessions for the first 3 years, then you submit what's called a partial report Once you've completed the partial report, you can request another 3-year extension to your exploration concession. So typically you get 6 years to explore. After the 6 years, you have to convert your exploration concessions to what's called a mining concession. So what's involved with that is doing, again, just environmental baseline work and some kind of scoping study, really, in terms of what a mine might look like. And so we're starting to do that on some of our more advanced projects, but very dynamic. We have a lot of exploration ground that we are working, but some of the more advanced areas, we're starting to convert them into what we call mining concessions. So that's really the status of where we're at today.
Thank you. And what about the local communities? Is it a rather intimate relationship with them? Maybe you could touch on that.
Yeah, that's a great question. And, one of the strategies and one of the important aspects of what you need to do is you need to get the social license to build a mine. Lavras de Sol, or the town of Lavras de Sol, is an interesting area. It's about 6,000 or 7,000 people. It's basically a cattle ranching and agricultural community. But what's interesting about Lavras is it's actually got a very rich history of gold mining because, as I mentioned earlier, the Portuguese arrived in this area and settled it because of a gold rush about in the late 1700s. So some of the families that live in the town are actually descendants of those original artisanal miners, if you like. What we've done is 2 things. Number one, we've started our office is in the town of Lavras, and almost all of our field crew are from either Lavras or surrounding towns. So our geologists, our technicians, our field crew, and so on. So we're a big local employer. Our country manager, Paul Serpa, actually moved to the town. So he's now a citizen, if you like, of Lavras. So that's great because he is the face of the company in Brazil. And, it's very, very important to have good community relationships. We actually have a program that we started earlier this year. It's called the Gold Trail, where we invite people to come to our office and get a passport. And they get a passport, and then we've created 5 different sites where people can actually go visit and get to learn about the history of gold mining in the town. And so the idea is that, there's things like this House of Culture, there's like an exhibition park, there's a tribute to the miners, and so on. The last station that they come back to is our office, and the geologist will come out and basically explain what we're doing with our exploration program and bring some drill core, show them what gold looks like in drill core, and so on and so forth. And really what we're trying to do is have an interactive, positive experience so that people really understand what gold mining is all about. So that's how we're developing our community relations strategy. And it's been good. It's been very successful. And, our strategy is very much to build from the inside out. And I've met with the mayor of the town a number of times when I visit the project, and he's very supportive of trying to develop a gold mining industry because it creates jobs, it creates good training, good skills, job skills for people, and that's what they want. So that's what we're trying to do.
Definitely. Very cool. So for the audience listening today, what catalysts are in 2023? Why should people consider investing in Lavras today?
Well, I mean, hopefully I've tried to demonstrate that really what our focus is on creating value through the drill bit. And so what they will see and continue to see through the rest of the year is ongoing drilling results and de-risking on the geology side. And really, I hope to show that, we're starting from this base of 1 million ounces of gold. And quite clearly, with the new areas where we're finding the sources of original gold, we're expanding on the size of that footprint. So it's going to be a multi-million ounce gold district, and the value creation in the mining industry actually does come from the exploration side of the business. That's where you go. I could name a number of companies that have had major discoveries, and they've gone from zero to literally billions of dollars of value creation. And so that's really what we're trying to do. And we think we have a very unique opportunity here because if this type of a mineral project was sitting in, say, North America and Canada or the United States, it probably would be a mining town right now. And so we're very fortunate that, we're the first company that's been able to really consolidate this land package and apply a kind of a modern day exploration strategy, scientifically based strategy to really unravel the real gold endowment on this property position. So,
great. I have one more question for you, Mike. You said that that your market cap is essentially the value of that royalty.
Yeah.
Would that royalty have a price tag that you would ever be willing to sell it for?
Yeah, it's a kind of an ongoing. That's a good question. We have a good sense as to what, like, really, when we look at that royalty at this point, anyway. I can kind of put my hand on my heart and say that I know there's gold sitting at Pristino, and I have a pretty good feel for what that gold value is. I think you'll see towards the end of the year that there will be some kind of official kind of gold resource put on that asset by Hoschild. And so again, there is a minimum value, but we're not in a rush to sell it. I think the closer that Mara Rosa project becomes a producing mine, the more valuable that royalty will become. And the other aspect to all of this is that royalty really gives us that exploration optionality on that very, very large land package. So any new gold discoveries or mineral discoveries, for that matter, made on that regional land package would accrue to that royalty. So it's just going to become more and more valuable. And as I mentioned, Franco-Nevada and Royal Gold have royalties on the initial production coming out of the Posse pit, but they don't have that exploration optionality that we have. So there's obviously some obvious buyers if we were to sell it.
Thank you so much, Mike. That's all the questions we have for today. I would leave it off to you to close things off. Any closing remarks?
No, I would just say thanks again, everyone, for taking the time to listen to our presentation. And stay tuned. We have a very interesting project, and I think there's more surprises to come on the upside. So thanks very much.